Hello, everyone, and welcome to the Edge by Ascential Amazon monthly briefing for the month of February 2019. My name is Jack O'Leary. I'm a senior analyst on the Edge by Ascential Retail Insights team, leading a lot of our research in the area of e-commerce, pure plays, and a major component of that is Amazon. A couple of bits of housekeeping before we get into the webinar. I describe what it is and we run through all of the content for today. First, this webinar is being recorded for everyone, and the deck will be available to share out after. Second, all attendees on today's webcast are on mute. There is a question and answer tool available to you through your GoToWebinar tool that you've signed in with. Please feel free throughout the webcast to leave questions there. I'll try to get to as many as I can at the end of the webcast. Those that I don't get to, we'll be looking to reach out independently afterwards via email. Also, the final bit of housekeeping is that on the last side, you'll see both our general Edge by Ascential email address and my own personal email address. Please feel free to reach out to either of those with content-related questions or questions about what we're up to here at Edge, getting access to some of the materials you've seen today, and anything of that sort. So with that, let's jump into the webcast here and look at some of the content that we're discussing. First, let's take a look at the agenda. For those of you who have joined this webcast in the past, welcome back. For those of you who are new attendees, what we do here in the Amazon monthly briefing is basically a two-part webcast. The first is a recent developments recap. Amazon, as we all know, is an extremely active retail platform with news headlines emerging every single day. What we try and do is collect, aggregate, and analyze the top headlines of the past month and relay those to you in an efficient manner here. And then at the back half of every single webcast we do every single month, we like to dive a little bit deeper on one specific Amazon topic. An Amazon topic or a tactic related to winning on Amazon as a manufacturer selling there, or a recap of a recent key event. This month, we'll be looking at Amazon's private brand strategy and just the implications of how that affects those of us who sell on Amazon.com. So two things I did want to note before we jump into the webcast is, in addition to our virtual webinars, we also have a really great schedule of in-person events and programs for you to kind of dive deeper on with us at Edge on our Amazon topics. The first is our e-hackathon in New York City on April 16th. It's an exclusive full-day Amazon US-centric summit with some keynote speakers. But what I think is really my favorite parts of the day is really the Hack Shop Masterclass sessions, where we break out into smaller non-competitive groups and dive deep on really focused tactics to win with Amazon.com and to really drive your Amazon business forward. It's a really great event. We focus on everything from advertising with Amazon to 3P marketplace selling to negotiations with Amazon. It's a great event, and if you're looking to kind of engage with us more, one that I would encourage you to attend. Also, secondarily, for our European leaders, we're doing a similar event, the eHackathon London on May 8th. Please do register for both these events. Again, this one is the same as the New York one, just a little bit more European oriented and obviously based in London. There are limited seats and early bird tickets are available now. These events sold out twice in the fall, so please reach out to your Edge partners or register directly via our website if you're interested in attending one of these and meeting with us on Amazon in another format outside of these webcasts. With that, let's get to the tactics here. So first, recapping the recent developments to do with Amazon from the month of February 2019. And the last time we spoke actually was in late January, and later that evening, Amazon reported their 2018 full year and Q4 annual results. And Amazon obviously does not reveal a whole lot with their own results, but a few things that I think are relevant for those of us who work with Amazon, sell on Amazon, from kind of a macro basis cascading down to our businesses is net sales grew at 31%, around in line with Amazon's typical growth year over year, but Q4 net sales were up 20%. I'd say this is on the lower end of what we see from Amazon on a quarterly basis, and does show that to some extent their retail business, I think, is reaching such critical mass and large scale that it's difficult for them to grow in the high 20% every single quarter, and they'll be seeking growth elsewhere through alternative business lines, but also through international growth. So I think in the US, Amazon's really looking to upsell their current close to 100 million Prime member shopper base, launch into new categories like grocery. But in terms of what they view as kind of open space competitive opportunity, they're going to really look to double down and accelerate growth in their international markets, drive new Prime member numbers up there, and really try to gain some of the scale and penetration and dominance, really, so to speak, that they have here in their home market of the United States. I think also another important thing to note outside of sales growth is operating income. Amazon reported annual operating income, a record year, from 12.4 billion. It's up 202% from last year. And I think two of the key revenue lines that are driving that growing operating income figure is their advertising business. One of the net sales figures they report is other, came in at 10.1 billion for the past year. That's predominantly, almost entirely made up of advertising revenue. Amazon's really growing their advertising offering and really receiving accordingly the sales dollars to that business for them. And this is a higher margin business for them than their typical retail business. And then additionally, AWS, very unrelated to their retail business, but highly profitable with operating margins in the usually high 20%, grew to 25.6 billion in revenue last year. So Amazon is now continuously reporting operating profit quarter-over-quarter. And I think of this as kind of a new inflection point for Amazon. They are a maturing business and one that is increasingly emphasizing profitable growth. This is their 17th straight quarter of positive operating income, and it's their third straight record-breaking quarter there. And I think the way this kind of cascades downwards to those of us interfacing with Amazon on kind of a retail basis is over 2018, one of the top storylines was increased emphasis on the individual profitability of individual SKUs or ASINs on Amazon.com. The increase in items being crapped out due to the lack of ability to make a profit on them. The increase in the hurdle for an item to stay out of add-on category. Add-on meaning items that are small, low priced, and shoppers need to bundle with a basket of goods to get over a certain dollar amount to even get shipped to them. Amazon is, yes, driving significant profit through non-retail business lines like AWS, but I think this idea of trying to drive increasing operating income and becoming more than the startup low to zero to negative margin business that they were of the past, that is no more. It's a new mature business, and they're going to continue to look to extend this operating income figure. So expect that type of attitude, maturity, and basically business principle to affect all aspects of the business, including the retail business. Now, another kind of headline that came out of this is, it is of note, Amazon reports their square footage as most other retailers do, and they've reached a whopping 288 million square feet of facilities around the world, and the majority of that is their fulfillment centers, and they have a large fulfillment center network in all of their countries of operation that really allows them to have the best-in-class fulfillment speed capabilities that drive much of the success of their business model. Amazon truly set shopper expectations around this idea of two-day delivery on thousands and thousands of items via a Prime membership, and Amazon facilitates that through these hyper technologically advanced fulfillment centers. They utilize a great deal of robotics. Amazon has also added other space types into this 288 million square footage figure. They acquired Whole Foods, obviously, in 2017. That adds significant space to this figure. They operate significantly growing corporate headquarters. They now have other types of store formats that they're trialing and testing. And additionally, they have new and different fulfillment centers focused on things like grocery or Prime Now, rapid delivery. But I think the really key takeaway here of this 288 million square foot figure is Amazon is investing and continuously will invest heavily in fulfillment and fulfillment speed and capabilities there. You only have to look at the chart on the right here to see that fulfillment as an expense line is growing faster than their net sales, which, as we know, is a really fast growing figure. Amazon's going to increasingly emphasize any way possible to lower this fulfillment expense. You know, they're investing the CapEx in the facilities, but how can they lean on their supplier relationships with some of you, the manufacturers on the line, to do things like have more efficient Amazon optimized packaging, shipping on container situations? How can they instead push you towards things like direct shipping items to shoppers directly from your own warehouses? This expense line is ballooning. And as I said, Amazon is a newly maturing business that is looking to report increasing and record-breaking operating income every quarter. Fulfillment expenses must be controlled. And then just kind of as an anecdote here, I mean, some of the things that they're investing in are truly remarkable. I just pulled one example of a fulfillment center based a little bit outside of Mobile, Alabama, in Bessemer. October 2018, groundbreaking. It's going to be ready for holiday 2019 this year. It is a 855,000 square foot facility. It's going to cost them $325 million. To give you an idea of this 288 million square foot figure, that's the equivalent of 10.3 square miles in total around the world of facility space Amazon has. Manhattan, the island, is only 22.7 square miles of relative space. Amazon is a massive global entity, and they're using all of this facility space to really drive forward their business and extend their competitive advantage over all other retailers. And now moving into some other headlines that are related to the business, just briefly touching on the big news that Amazon's HQ2 almost circus of the past year, where they ended up selecting a location in Northern Virginia and New York, has resulted in some new headlines with Amazon unable to negotiate and deal with discord among the community and some legislator members in New York City, and have chosen to scrap their New York plans. I think the only real relevant impact of Amazon launching new HQ2s is that one, if you're a manufacturer located in one of these locations, there is some potential implications around the cost of talent there, having an Amazon e-commerce operator in your locale and drawing talent. Two, I think in terms of negotiations and where we locate our organizations and where headcount needs to be for face-to-face negotiations, the more kind of spread out and where HQ headquarters are around the country, does have some implications in how we run our e-commerce businesses that way. But outside of that, just an interesting headline from Amazon, and one that got a lot of press. Now, looking at more of their retail offering and their innovation, and we're going to focus first on some more kind of generalist Amazon topics before I get kind of to some of the more broad ones. But Amazon launched a really cool new feature called Amazon Live. It's almost like a QVC-like program hosted on Amazon, where they live stream product demonstrations or cool videos of folks, you know, cooking or trialing products, and it's highly shoppable. So if you look at the left side of this slide here, there's basically in the kitchen with Eden Eats. Eden Eats would be an influencer, and as she's demonstrating and showing items and cooking for individuals, there's a carousel of purchasable items from Amazon.com cascading around the bottom. These live stream videos are hosted by influencers. They're also hosted by Amazon staff. Some of the content is curated based on things like Amazon data. So as you can see on the right side here, a few of the different recently live videos, there's everything from today's deals live. So that's obviously content generated by what's going on the Amazon site. This is just showing, you know, Amazon continuing looking to iterate on what the shopping experience is with Amazon. It is a very good platform for a shopper who knows what they want. They go, they search, they research, they find an individual item, they purchase it, and it's delivered to them in a really highly convenient, fast manner. This shopping experience, many have come to call spear phishing. Amazon's looking to drive more experiential shopping into the online experience. So how do we build a bigger basket, helping the economics of the order for Amazon? How do we help shoppers discover items that they might want? How do we keep them on site longer and basically spending more with us? I think this live streaming program is a really interesting opportunity there. And I think for us as for suppliers on the line, Amazon just launched this, but it'll be interesting to see in what ways, maybe through Amazon's ad business, that you can get distribution and exposure and promotion through a platform like this. Another news item is Amazon, in a sustainability effort, is pledging to have 50% of their shipments go carbon neutral by 2030. It's a program called Shipment Zero. Amazon's invested heavily in wind farms around the country to basically offset some of the carbon emissions that they have. One thing Amazon does face in terms of criticism is many believe that the issues with Amazon shipping all these individual items in their boxes and their fulfillment centers and their growing logistics network that now includes over 50 cargo jets is a sustainability issue for many shoppers out there. So Amazon's looking to get ahead of that by investing in an area that is very unrelated to retail, but hopefully helps with kind of shopper expectations around them as a company and reinforces their brand going forward. It's a major investment for them and an interesting one. Looking at some investments in technology that Amazon made over the past month, they made two in the vehicle space. One is in a company called Aurora. They were involved in a Series B funding round for that company. These are self-driving vehicles. Level 4 is the classification, which basically means the vehicles are able to handle almost all structured environments, but do need to have human supervision in terms of, in case they encounter something that they cannot handle. They're not full level 5 autonomous vehicles able to do everything on their own. And then additionally, Amazon invested in an electric vehicle startup known as Rivian. Rivian has manufactured what are known as kind of electric vehicle platforms, and they're rolling out a few new vehicles that are going to get involved in the electric vehicle market. I think the implications here is just Amazon looking to position themselves for the future of what enabling technologies are going to be relevant to our last mile fulfillment as a company. So things like autonomous vehicles and how do we lower the cost of that. Electric vehicles is a big trend there as well. So it's interesting to see Amazon operate very much as almost a venture capital firm to some extent, investing in these companies that potentially have implications on aspects of their retail value chain long term. Additional investment from Amazon from the past month was they acquired a company called eero. It's a Wi-Fi coverage optimizer for the home, basically helping individuals extend and enhance the Wi-Fi coverage in their houses. It is no mystery to anyone, Amazon is heavily investing in looking to position themselves as a central hub and force in the home and to influence any sort of commerce that goes through connected homes going forward. So their Alexa voice-powered speakers and now connected appliances and devices is one of the first and most important aspects of that. They now have investments and ownership stakes in connected lock companies to enable things like in-home delivery. They have opportunities, or they have also looked to do things like in-garage delivery. Basically investing in a startup like this and extending its reach. They can make these devices highly compatible with your Alexa systems, making basically your Amazon enabled home setup all the more easy, which helps them long term just get more sales dollars as increasingly more orders are going through these platforms. I think the only key takeaway here for suppliers is that although the return on investment is next to none in terms of sales dollars in investing in voice capabilities, we do believe that voice is going to have a significant share of just shopper digital interaction going forward. And while we haven't figured out the commerce aspect of it, Amazon hasn't figured out the commerce aspect of it exactly yet, I think that the best-in-class manufacturers and brands around the world are trying to figure out and develop capabilities for voice, even in just a promotional sense, having skills that maybe reinforce brand equity with shoppers out there for these platforms. So I think the lesson here is just simply to not ignore the trend that is coming in terms of connected homes, voice systems, and whatever commerce might come through that. In the realm of kind of health and wellness, Amazon acquired Pillpack last year for nearly $1 billion. For those of you who may be unaware, Pillpack is a highly convenient pharmaceutical drug delivery company. Basically, the shopper loads all their pharmaceutical needs into the system and some OTC and vitamin needs as well. And Pillpack is able to distribute to them directly via delivery to their home individual packages of their daily pill needs. It's really convenient, managed heavily by Pillpack and their kind of proprietary systems. Doctors can write the prescriptions directly to the system. It's a really intuitive, interesting startup. And by acquiring it, Amazon gained the ability to distribute pharmaceuticals to 49 of the 50 US states. But Pillpack was only able to have that level of distribution out of one of their fulfillment centers based in New Hampshire. They have other fulfillment centers based in other states, including one in Phoenix, and they've been applying to extend its pharmaceutical distribution licenses heavily to a number of new states. In November, I actually plotted on this map you see in front of you here some of their new applications looking to distribute to New Mexico, Indiana, Amazon's home state of Washington. We've been told that Pillpack's been granted 9 new state pharmacy distribution licenses recently out of this Phoenix facility. Basically, this is just going to enable the system to operate more efficiently out of more fulfillment centers to more states and extend Amazon's ability to operate this system and their relevance in health and wellness as a category. I think if I'm an OTC drug manufacturer, this is really interesting. Amazon is going to be increasing relevance in my category because they are really looking to attack health, wellness, everything from pharmaceuticals down to medical supply sales in the eyes of the US consumer and eventually the global consumer. And so it's important to give them kind of the related attention they deserve. Looking abroad, Amazon has moved to restructure to cope with the changes in the FDI laws around marketplaces in India. There was new restrictions that emerged at the start of the year, basically meaning that no seller can have more than 25% of their total sales on one singular marketplace. Marketplaces cannot offer discounts or affect prices on items that are sold by 3P sellers on their platforms. Foreign marketplace operators cannot have what is considered ownership stakes in any of the sellers on their platforms, and the marketplaces must submit a pretty robust annual compliance report. For those of you who are maybe unfamiliar, Amazon was operating a marketplace in India. Previous law just called for no first-party sales, so no acting as a typical retailer in India if you were a foreign company like Amazon. So Amazon was just 3P. But they had a significant ownership stake, 49% in their largest 3P seller on the platform, a company called Cloudtail. They've moved to redistribute that ownership stake. Catamaran Ventures, an Indian private equity firm, has moved their stake with increased investment up to 76, moving Amazon's down to 24, basically bringing them in compliance in that regard. And then in terms of the volume of sales moving through the Amazon platform, Cloudtail will now begin selling on rival marketplaces like IndiaMart, and additionally, they will move to a D2C business. Interestingly enough, they will not sell on Walmart-owned rival Flipkart, but basically they're looking to kind of differentiate, distribute their sales channels here a little bit and set themselves up to be compliant with these regulations. Also interesting in Amazon around the world, Amazon Pay Code has rolled out. It's a partnership with Western Union that allows shoppers in a bunch of different markets where Amazon doesn't actually have a marketplace platform to transact and make cross-border Amazon orders in their local currency. They basically shop an Amazon.com marketplace in maybe a nearby market. They use Amazon Pay Code and then visit a Western Union store where they can pay for their purchases in their local currency in cash, and then Amazon will ship the items cross-border to their market. Paycode is launched in about a dozen markets around the world, Southeast Asia, South America, and Africa being the current presence, as you can see here. Amazon is setting itself up to try to sell to as many shoppers around the world as possible, connect them with as many global sellers as possible. For manufacturers, I think the implication here is that your items are going to get exposure and distribution to more markets and shoppers around the world than maybe perhaps you considered through initiatives like this. And so there's all sorts of compliance issues with things like this, local language product content concerns, pricing concerns with items moving cross-border and disrupting your pricing policies in different parts of the world. It is an ever-growing global platform, and we expect initiatives like this only to continue. In China, Amazon is considering a merger with popular cross-border platform Kaola. Kaola, for those who maybe are unaware on the line, is a cross-border platform that buys Western goods and sells them to Chinese consumers. Amazon's China marketplace platform is relatively small compared to the giants that dominate that domestic market in Alibaba's Tmall and Taobao, and then JD.com. Amazon even has a Tmall storefront. It's a testament to just how dominant Tmall really is there. But Kaola and Amazon teaming up could be really, relevant and powerful for Western brands gaining greater distribution and access through their Amazon relationship to the Chinese consumer. Kaola is a cross-border platform that many e-commerce teams are still trying to figure out, the best way to work with. An Amazon direct relationship there could give you greater options in terms of distribution there outside of the Chinese local giants in JD and Alibaba. And then looking to Australia, Amazon's looking to extend their capabilities there with a partnership with a company called ParcelPoint. ParcelPoint enables click and collect for a number of the online top online platforms in Australia. As many may know, Amazon moved to a little over a year ago, launch a full marketplace platform in Australia. They're slowly extending their capabilities, the number of sellers, number of items they sell there. ParcelPoint uses physical retail locations, over 1,500 of them, to facilitate both click and collect for orders and returns. By aggregating all of the orders to singular locations like this, I think the economics work a little bit better versus delivering to shoppers' doorsteps. Also, shoppers really enjoy click and collect as an option if it is convenient to them. So this basically just extends Amazon's, competitive set and option set to shoppers in Australia, and making them an all the more relevant a player there for suppliers that do operate in that country. And then finally, and this lends itself well to our next topic, Swiss retailer Migros is going to produce Amazon private label. Migros owns a company called M-Industry, or a bunch of companies. It's a holding setup with 23 companies, 9 of which are manufacturing, and they're all focused on food or near food products, and it claims to be one of the world's largest private label manufacturers. Amazon interfacing directly with a European retailer to produce private label. It just shows, how much they're looking to extend into PL and looking to do that now increasingly outside the United States, but also in Europe. And this lends itself really well to what I want to discuss in detail today in the next 5 to 10 minutes, Amazon private lands and what's been happening there. So first, just setting the landscape here, I like to bring up our Amazon digital ecosystem chart to just show the breadth and depth of all the different industries Amazon is in, and all of the different touch points they have with the consumer. They know many consumers' media consumption habits via, Amazon Prime Now streaming. They interface with shoppers increasingly in store-based environments, now in Whole Foods stores. They know all of your marketplace behavior. They also have deep, broad inventory of all of many of the national brands around the world, and deep data on how shoppers shop that on Amazon.com. This makes them extremely adept at launching their own brands, either private label or exclusive brands with manufacturers, into categories they feel that they can have a competitive advantage in, and with PL, drive more margin to their business. As I said earlier, operating margin is now a key point of Amazon going forward here. So they've launched in countless categories, consumable, non-consumable. Their Amazon Basics legacy in consumer electronics and accessories is a well-known one. They've launched toy lines. They even launched Amazon own brand motor oil last year. Amazon's private label launches have only ramped up in the past year. And looking to quantify that, I think this is a great resource here. I've actually listed the URL for anyone who'd like to go check it out themselves. But a insights firm known as TGAI actually aggregates all of the private label brands Amazon lists and the exclusive brands. These are items that manufacturers manufacture and sell exclusively on Amazon.com, available on the site. At that URL, you'll find all of that organized by both market and category. So, you can look up United Kingdom furniture exclusive brands, for example. They say that there is 137 current private label brands sold on Amazon and 396 exclusive brands. They are extending their presence across many different categories: apparel, consumables, household, pet, and their coverage is really wide here. And the sales of certain ones are really exploding. So this is some of our own data from the Edge sales and share tool that we have. And looking at some of these brands that are the real winners in their categories, they had really great years in 2018. Looking at the year in review here, Presto, which sells a number of household goods, paper towels, toilet paper, cleaning supplies, dishwasher, fluid and detergent, had greater than 23 million in sales for the year. That's 24x what they did the previous year. Basic Care, which is an exclusive brand manufactured by Perrigo, had over 10 million in 52-week sales. Mama Bear, oriented on kids in some products there, had over 9 million. These brands are really succeeding on the platform. We're going to get into a little bit why that is in a few slides here. But looking at one of the top ones, I called out Presto's top sales. They average $480,000 in sales a week, and have now captured 6% of the market share in their respective category. That's a significant figure, and one that operators in that category, should be concerned about. Amazon is investing heavily in their own items, their own private label and exclusive brands, to attack categories that they think they can have an advantage in, and using some somewhat predatory behavior in promoting those items as well. And let's look at some of that predatory behavior. So Amazon is giving their own items access to space that we as manufacturers probably can't access ourselves, no matter what type of ad spend we put with Amazon advertising, AMS, AMG, now AA. On the left side is an example of Amazon occupying on the product detail page the entire top line banner with an Amazon own brand, Amazon Basics batteries, and indicating very clearly to the shopper they feel you can save by buying the Amazon brand. This isn't in the search results. This is on the product detail page of the national brand, and Amazon is promoting their own item that severely. I mean, I can imagine some shoppers on smaller screens that's occupies the vast majority of the share of what their eyes can see, and displaces a fair amount of shoppers that have already picked the national brand as the item they want to review. It's not just on product display pages as well, although that I think is a little bit more aggressive. Also within search, Amazon has done things like have top rated from our brands carousels available within the organic search results that a shopper will have from searching something like paper towels or toilet paper, for example. Amazon owned items also perform really highly in search in a number of categories. It is a somewhat democratic space. It is algorithm driven, but Amazon items are really driving success because of some of this predatory ad positioning that they get. And then I wanted to do actually a case study in what this actually does in terms of a sales effect. This is an example of Amazon promoting their Basic Care ibuprofen on a national brand's actual product listing page. They said similar from our brands, and promoted it to the right side here with the price very clearly advertised. They're utilizing the national brand pull and demand to basically lift up their own new product launches. They launched Basic Care at the start of 2018 or late 2017. It is not a private label. It is an exclusive brand. It's produced by a manufacturer known as Perrigo, which also sells their own items on Amazon.com. But Amazon is really promoting it and basically cannibalizing the brand equity of a national brand to do so. And let's look at what, with heavy controls, this means for how a brand like Basic Care does. So what we've done here is we have Basic Care plotted against a rival competitor product known as Good Sense for OTC medicine here. Good Sense is also produced by Perrigo, the exclusive brand manufacturer of Basic Care, except Good Sense does not get the promotion as an Amazon exclusive brand that Basic Care does. Good Sense has been on the Amazon platform for a substantial amount of time, has a legacy and fairly robust sales, a good standing, and we saw once Basic Care emerged and started getting this predatory positioning that I'm talking about, it went on to exceed the sales of Perrigo's other brand that is not an Amazon exclusive. It just goes to show you the effect that this type of advertising can have on shopper behavior. And then launching out to a little bit of a wider view with the total category, plotting Basic Care in one specific area. So they produce a lot of different OTC drugs, but looking at stomach relief specifically here, Basic Care against some of the national brands. As you can see here, Basic Care is the blue line that's consistently trending upwards. This is weekly market share plotted from our market share tool. and basic care is now a leader. This data was collected all the way into the end of 2018 here. So Amazon's advertising and what they're doing with these items is having a major effect on shopper behavior. Now, what's next? What other things can Amazon do with some of these items? Well, recently, one of my colleagues, Chris Perry, just detected that Amazon is now bundling their private label with complementary items. Here, they've got basic care, Amazon Basics batteries, which I showed actually a little bit earlier, being bundled with various items that require batteries. Amazon is doing this on their own in their fulfillment centers and warehouses. Really, this is occurring on the Amazon UK site. And again, Amazon is just giving some of their own PL an advantage here by trying to launch it in kind of complementary and price favorable bundles that are going to drive shopper purchase behavior long term. This is something that Amazon is really investing and leaning in heavily. So what does this really mean for brands? Just to close out here, I guess the first thing is, to all the manufacturers on the line, this is not a new issue in retail. Private label has been around for a very long time. Amazon, in their negotiations and communications with manufacturers, will put this as, we're trying to grow the category, give shoppers options at all price points. We're trying to fill gaps in the assortment that maybe you've given us to the category, but nevertheless, it is disruptive. And so there's a number of areas to emphasize, some of which are legacy, just strategies in combating PL, some of which are new to the digital shelf. I think the first is the most general, but continue to do what you do best and enforce and reinforce the brand equity of your national brands that really do resonate with shoppers. It says something that Amazon is putting items on national brand product display pages because many times shoppers are searching that national brand for the item. So continuing to just reinforce what drives that shopper behavior will be important and even more critical as Amazon moves more and more into exclusive brands and private label in your categories. Also, important to the digital shelf is, if you're not doing it already, and I'm sure many are, but really resource both headcount and investment in search optimization for Amazon, really focusing on things like your item titles, your bullet points, your product content, in-stock levels, continuing to do things like trying to win the buy box, continuing to perform high in Amazon search results to win those Amazon badges that drive increased search. It is an ongoing and constant 24/7 algorithm-driven competition. Amazon now has private label items that are involved in receiving or receiving favorable treatment. So you need to continue to resource accordingly to defend against that. And then finally, Amazon's launching more and more advertising tools, new data sets, new targeting tools with the launch of Amazon advertising, investing accordingly for just always on Amazon display ads to really capture some of those banner ads that Amazon's positioning some of their items into. Just continuing to invest and resource in that area accordingly will also be critical. So this webinar, we run 30 to 45 minutes, so we've got I'll take questions for about 2 to 5 minutes here, but before I get into that, again, if there are any call outs or questions you have you'd like to ask via email, my email is here at the bottom of the page, anything on the content. And if you're looking for the recording, please do feel free to reach out to the info@Ascential email as well. All right, so a bunch of questions about copy of the deck, so I will encourage everyone to reach out there. And one of the first questions we have here is around Amazon's connected home strategy and what we expect from Amazon there further, and if they expect to block other retailers off of that platform. Well, so to this point, Amazon has not done that. Alexa is an ecosystem that they're trying to foster and encourage. Best Buy, for example, a US consumer electronics retailer, has an Alexa specific skill. Amazon would love for as many retailers as possible to get it on Alexa and to really drive the value prop there. The way Amazon looks at it is very much kind of in their platform strategy, really being almost as a retail as a service platform, where Alexa is a system where Amazon is collecting data on shoppers, increasingly influencing voice commerce going forward, and then eventually, when that commerce starts to rise up, taking whatever percent of sales they can via referrals through the platform. Looking forward here around the topic of Amazon private label, what do we expect to see from Amazon with their private brands and this behavior, and is there any other strategies we'd recommend in terms of negotiating and dealing with that? I think that in terms of the latter question here, Amazon is a difficult negotiating partner. They are increasingly moving their vendor relations negotiations over to kind of a self-service model with most brands. Amazon is moving more and more things to the algorithm-driven side in terms of where they appear, their pricing. That being said, we have heard that from suppliers that have one, high sales volume, and two, invest heavily in Amazon programs and advertising, that the responsiveness from Amazon and the collaboration there is a little bit more beneficial. And this can be helpful in examples when you see Amazon really aggressive display ads on your product display pages, for example. In terms of where Amazon's going to look to extend PL going forward, I think one of the areas that we're looking at is fashion. There's heavy margins to be made there. Amazon has also struggled in that category. They've really struggled to get a lot of fashion brands onto the platform due to those brands' unwillingness to be really associated with kind of the everything store. So we expect Amazon to launch more and more of their own brands there at really competitive prices to try and capture that margin and drive more sales in that category. We have a question here about Amazon Pillpack and what aspirations Amazon has for kind of health and wellness in those categories for 2019 and beyond. I think the big summary news points that we've seen to indicate some elements of Amazon's strategy is there's the Berkshire Hathaway, JP Morgan, Amazon partnership to launch and continue working with facilitating health insurance for their employees. There's some speculation that Amazon eventually would look to try and become some sort of marketplace to facilitate end consumer access to health insurance. That would be very interesting, potentially regulatory concerning, given that Amazon has all this data around our spending habits around these categories. So that I'd say is the most speculative part of the range, but Amazon is definitively moving into trying to impact all retail aspects of health, wellness, medicine, OTC, and drug. So Pillpack being the big acquisition for distribution to shoppers. Amazon also is, in the realm of our second topic, exclusive brands and private label, adding more and more exclusive brands in categories like, at-home health monitoring tools, things of that sort. So look to Amazon to continue to try and just extend their capacity in those categories. So with that, I know we've run very close to the time here. I wanted to thank all of you for joining me on this month's Amazon monthly briefing. Be on the lookout for next month's monthly briefing, similar structure, and please do feel free to reach out to the 2 emails you see there in front of you with any questions you might have. We'll be following up with any questions I did not get to via email over the next week. Thanks again, and enjoy the rest of your day.